stop losses, specifically around moving your stops to break even. Often you get into a trade, starts to go, so you move your stops to protect your position, and then it'll come back, stop you out, and then launch. It gets quite frustrating.
Yeah.
How do I avoid that happening?
Okay. You don't necessarily avoid that from happening. This does happen time to time, and that's okay. But I think I know what your question is, how do I make sure that I can move my stop loss to break even and get the profit, right?
Yeah.
That's what you want to do. You don't want to not move your stop loss to break even because you want to protect your risk as much as you can. Let me take you to a chart on this. I'm going to explain this because I'm going to try to explain this in a simple way. Obviously, when it comes to stop losses, it's a better understanding of the market that you have as a whole that's important. But for the sake of simplicity, I'm going to give a stupid shortcut answer. How about that? If that's okay. Yeah, I'll just do it like that. But don't hold this as a holy grail. Just use this as a shortcut for now until the overall knowledge of the market gets stronger and stronger in your mind. So let's say you have a movement that starts to go down. Okay, and like we always do, we talk about pullbacks, and as pullbacks come in, you position yourself and you enter the sell. So let's say you see this movement coming in to an area that you like, and you're like, okay, I'm gonna do my sells, and you start your sell there. The sell's working in your favor, but because it slows down a bit, you're like, I want to protect myself. I want to be safe on this. So you move your stops to break even, later to find out I got hit, and then later to find out, oh my God, right? Like,
Yeah.
oh my goodness, right? Like it's moving without me, and what is this? And why is the world after me? And why me, right? Like this is this is the common feeling. Okay, now one of the things to note about this is when you're moving your stop losses to break even, first things first is your entry. Whenever you get your entry, it's a two-part thing I'm going to explain. Your entry needs to rush in your favor. That's number one. Okay, if your entry is not rushing in your favor, your timing is completely off. Your stop doesn't matter. That's a secondary thing at this stage. Okay, you should always have a stop, don't get me wrong there, but at the same time, as if the trade doesn't rush in your favor, it's the chances are your stop's going to get hit. Does that mean don't use a stop loss? No, I'm not saying that. I just mean you didn't enter it right. Okay, let's suppose you do enter your sells and you have your original stop loss here that you're looking to move to break even, right? Because the trade is working in your favor. The only time for the shortcut that I'm about to explain, the only time that becomes logical is when you make a new low. So for example, if you have a sell here, okay, and your stop loss is there, and the trade's also working in your favor this time, whenever you take out, the last guy who made the newest high, if you take that out, only when you're out of the area can you say, you know what? I'm going to move my stops down to break even. That's like a simplistic way of me telling you, and that's going to be a better way that's going to protect you. So for example, if you do a sell here and the trade's working in your favor and your stop was originally here and you moved your stop to break even, this will hit you, right?
Yeah.
Later to find out, oh, I knew it, but I'm not in it. And that's the worst feeling on the planet, right? So you want to make sure that wherever you're in, you don't move your stops to break even until you clear that area. Once you clear that area, you can move your stops to break even, and the chance of you getting hit again decreases a lot. So that's like a shortcut method. But at the end of the day, stop loss is a mechanism for risk control of something you know how to do. Right? You only control risk on something you know what you're about to do. Okay, so for example, if someone comes to me on the street and says, I'm gonna flip a coin. If it's heads, I'll give you $100. If it's tails, I take away your entire life savings, your family, and your cars, and whatever you have. Wait a minute, I've never played this game, and this is too much at risk. That's illogical, right? Now, on the other hand, let's say you're playing a game that you do understand. So now you're doing something that let's say you're a particular doctor, and you know when someone has a certain symptom, you're like, I bet you he's got the flu. Okay, I bet you he's got the flu, but we have to do a test. And then the other guy is saying, I don't think he's got the flu, and I'll bet you on it. That you have a stop loss that you're saying, okay, what's the bet? $100. But you can now push that risk in your favor because you know the game you're playing. A stop loss should be something that you are risk controlling in a game you understand. So if you're entering a game you don't understand, then a stop loss, worrying about where my stop loss is, it's already difficult as is. I want to point out another piece of this is, how long have you been trading yourself in this industry? How long have you been in this industry?
3 years.
3 years now, right? Have you come across people who say, okay, I'm about to get into trading, and what's the right table to buy where I'm supposed to sit? What's the right internet connection? Okay, forget all that. What's the best country I should set up my company so I don't have to pay taxes or reduce my taxes? You see what I mean? When you hear people saying, I haven't even started, but I'm concerned about my taxes, you pay taxes on profit.
Yeah.
You don't pay taxes on imaginary numbers, right? You pay taxes on what you're, if you have to worry about taxes, that means you're good. You're doing well.
Yeah.
But if you're worried about taxes on day one and you haven't even started, you haven't even studied anything, it's the wrong question to ask. Stop loss is no different. Stop loss is you got to understand the industry so you know where your stop loss is actually supposed to be. But what we just discussed today is the shortcut methodology of, if you break that, get into a new area, a new territory, a new low or a new high, that's when you can start to move your stop loss to break even. Again, it's a very stupid, simplistic approach to it, but that will help protect you to get your risk tight. And if there is a movement, you'll be able to ride it.
That's good. A very interesting perspective.
Yeah. So it's you got to be careful with the stop losses.